Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, September 7th. Before I click through the charts, just want to ask you to please click like if you haven't already. Become a Wicked Stocks YouTube channel subscriber. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for 20% moves on those underlying stock picks. Just on Wednesday, we put out analysis on IBM. You should check out a 10-year channel structure it is presently testing that may offer, a directional indication as we move well into next year. I'll let you check that out. We offer a 5-day free trial, so if you sign up for wickedstocks.com, you can check out everything, including that IBM stock pick. And if you don't like what you see after 5 days, you can bail out at no cost to you whatsoever. So let's check out the charts. I'll start with the weekly chart you're familiar with. We tested the 309.29 channel top about a month and a half ago. We spent about a month there and unable to close above it at the end of any week. And as long as that was the case, I'd mentioned how the channel bottom that is presently at 222.83 should be considered attainable within a month or two. And that happened in the course of about 6 weeks. We tested the channel bottom at 222.83 this week, 4 weeks ago roughly. And coming off that channel bottom, the big picture certainly allows for a return to the 309.29 channel top over the next 2 to 3 months. We're a month into that right now. And so perhaps inside of a couple of months, and in fact, let's jump to this chart here. I've been mentioning when these speed lines converged about a week ago, they were a range, and now I've been hinging off of 253.11. Now we settled above 253, that speed line, on Tuesday by a hair. No follow through, obviously, on Wednesday. We're back below it. I'm going to just kind of cut to the chase on that right now and mention that 253.11 is still a trend-defining speed line. You can see on this chart how it has essentially held the market, despite the fact that we did close above it a bit on Tuesday. You know, I equate these line studies. They're not like concrete, where you close above them and there's a firm indication, especially if you close inside the 1% zone. I kind of equate it to a rubber band stretching. And so we're chipping away at 253.11. It hasn't followed through to the upside. I will say that merely closing today, not only above 253.11, but also above Wednesday's 255.39 high. Because, often if you follow the markets long enough, there is this dynamic that does play out where we put the high out, we sold off hard the following day. That would have been Friday of last week. And so we've been trading inside that range between last Thursday and Friday for the last couple of days. Inside of Tuesday's range was Wednesday. So as these highs progressively drop, just merely breaking that pattern, merely closing above Wednesday's 255.39 high should be a much more reliable go with to the upside. And so there are no certainties here, of course. I know you know that. So we're just doing our best to give you the green light for bullish continuation near term. Until then, continued settlements around this 253.11 speed line, certainly below it, will keep the 223.58 channel bottom in reach again. And I say again because it's the same structure on the daily chart at 223.58 that we find all week long at 222.83 that I showed earlier in the video. So let's talk downside today. Holding below 253.11 will keep 242.53 in reach. That is a downside 3/8 Fibonacci that held last Friday's low. It can continue to contain intraday selling pressures today. I don't know about daily selling pressures. If we break 242.53 today, I do think 235.92 is likely. And that is a new rising 2/3 speed line. When I say new, it is based on last Thursday's high of 261.18. So it's a near-term support level. Nothing to buy on, say, a multi-week basis, but we may bottom out here through the balance of the week, the next couple of days. And from here, if we test 235.92 today, we could rally back to the 253 rather 11 speed line by tomorrow, Friday's close. We could trade inside this wedge for the next few days. Now, we did just come off of longer term support. I do want to remind you of that. At 223.58. And I am still anticipating 309.29 over the next 2 to 3 months. We're a month into that roughly. And if we close today above 253.11, and yes, let's round up to 255.39 on a settlement basis. If we close above 255.39, we should peel away to the upside. This 274.14 rising channel top, then likely within 3 to 5 days. And that is a formation. I've got it as session containment right now. It may well contain buying through next week. It does converge over the next 3 or 4 days with the significant gap area between 280.93 and 289.52. So yes, this channel top over the next week or so will gain in importance, and it can contain at least daily right now. As we spill into next week, I may bump it up to a 3-star weekly resistance area given its convergence with the 280s. But I will say that whether it is over the next few days or the next couple of weeks, if we close above 274.14, we're just another week or two away from reaching that 309.29 targeted, yes, targeted longer-term resistance area, targeted above, the 222.83 channel bottom. Let's continue with the downside, that I've already illustrated, the 253.11 resistance, able to contain buying through next week, below which we can fall back to that 223.58 formation by the end of next week. I've mentioned how 242.53 can contain intraday weakness. This is a solid day trade chart right here, selling 253.11, covering at 242.53, or perhaps all the way down at 235.92. This level, 235.92, well suited to contain daily selling pressures, possibly through the rest of the week. And yes, if we close today below 235.92, we should tomorrow, Friday, fall another 10 points or so down to the 223.58 long-term channel bottom, where we can bottom out into October, quite possibly through the rest of the year, and above which 309.29 remains a 2 to 3 month target. If we close today above 255.39, which would be a clear buy signal above the 253.11 speed line, then I would give this 3 to 5 weeks at the most for reaching 309.29. I'm trying to think if there's anything else that needs to be said. I'm kind of combing through the charts here. I'm looking for, I know we've got 268.46. I forget exactly offhand what that is. And all I'm going to say here is if we push or open today above 255.39, that in itself is a sign of strength for the day. So keep that in mind, not just closing above 255.39, but an intraday violation of 255.39 should set off follow-through buying pressures, short cover trade, follow-through buying. 274.14, is it in reach? I doubt it, but 268.46 is, and I believe that is a Fibonacci level on the way up in the order of a 50% upside, where we could top out for the remainder of the day. But closing today above 255.39 is a go with buy signal. We're expecting 309.29 anyway, but closing above 255.39, 274.14 likely within 3 to 5 days, and within 3 to 5 weeks, 309.29. So you options traders, if we close above 255.39, you may reach for 280 out of the money calls that don't expire for at least a week, as I would expect this rising channel top to be tested in about a week or less. And you may also reach for 310 or 315 out of the money calls that don't expire for at least a couple of months. This becomes a 3 to 5 week target with a settlement today above 255.39. Until then, as we continue testing the speed line, it may well hold into next week. Short-term options traders may reach for 224, 225 out of the money puts that don't expire for at least a couple of weeks. That is the options play that is available right now, and I think it pretty much implies the directional trade that you can place, selling 253.11, anticipating 223.58 over the next week or two. But that is a bit of a counter trend move, FYI, and I know you're aware of that. Coming off of 223.58, there is this longer term updraft that is drawing 309.29. And so selling 253.11 is a counter trend move, well suited for aggressive short-term traders. But if you're a big picture trader and you're looking to go long Tesla and you haven't yet, down at 223.58 from a few weeks ago, the next opportunity would be a settlement today above 255.39. And I'm going to leave it at that. 10 minutes now. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla. You have a great day.